Thank you for joining us on Market Mover this beautiful day, where we are going to be bringing you with insightful conversations around the Nigerian stock market. Now, the Nigerian stock market is one place that shareholders are meant to converge. And so we'll be looking at a topic that will delve into balancing shareholder trust and market realities. We'll be looking at balancing shareholders trust and market realities. Now, it is important I mention to you that in the Nigerian stock market, the past week witnessed a 1.3% decline, primarily driven by a 5.5% pullback in the financial sector. Meanwhile, international breweries, a prominent player, has faced challenges. Now, the company's second issuance of 161 billion shares at 3.65 naira per share and approved by the Securities and Exchange Commission aims to raise capital. Now, against shareholders' optimistic positions, the recent issue allows shareholders to only subscribe based on a ratio of 6 new shares for every existing share held. This move comes as international breweries grapples with escalating losses, recording an unaudited pre-tax loss of 87.64 billion naira in 2023. The company's strategic plan includes addressing its debt burden and seeking additional equity capital. However, in the financial market ecosystem, 3 interconnected forces shape the landscape. Now, one of these is the corporate governance, shareholder sentiments, and company performance. But most importantly, regulations, which is supposed to be carried out by the Securities and Exchange Commission, serves as the invisible architect that shapes the behavior of market participants, safeguarding investor interests and maintaining market integrity. So, what has been the biggest problem in the Nigerian financial markets? What is the level of shareholders' protective measures that are being implemented in recent times? To help us understand these dynamics, we'll be asking Mr. Stephen Nwachukwu, our financial markets analyst, to share with us his insight. But before then, we will receive Madima Owo, our product analyst, for her zonal business and economy reports. That will be after this short break. Don't change the channel. We are on Market Movers. Thank you for remaining with us on Market Movers, your premium business and economy show. We're going to move straight to zonal business and economy reports, and we have Madima Ogo to share with us updates from the states. Madima, welcome to the program.
Thank you very much, Mr. Osai.
You're looking beautiful.
Thank you very much. That's what it's supposed to be.
Yeah.
Thank you. So, on the zonal reports and the business or economy analysis here, Unilever Nigeria, one of the leading consumer goods companies in the country, has announced in January 2024 that it will stop the production and sales of 2 of its popular brands, Omo and Lux, effective from February 1st, 2024. Following the exits of these brands, what does it portend for Nigeria's home and laundry care sector? Now, let me start with a brief market overview. It will interest you to know that the home and laundry care market in Nigeria is projected to reach $3.38 billion by this year, 2024. This market encompasses various products related to home and laundry care, including detergents. Interestingly, the largest segment within this market is laundry care, accounting for a significant portion of the revenue. The market is expected to experience an annual growth rate of 3.06% compound annual growth from this year 2024 to 2029. This growth is driven by factors such as the rising middle class in Nigeria, which leads to increased demand for premium home and laundry care products. On the per capita revenue, considering the population, the per capita revenue in Nigeria for the home and laundry care market is estimated to be of 14.74 US dollar in 2024. So you see, from my observation, the speculation from what it used to be back in the times, 2 years ago to what it is now, I observed that it literally has increased, So I feel like this very product is literally adding value to not just the economy, but on the revenue aspect, and also to the use of people.
Yeah, I think that the product is the growth that you are referring to, in my thinking, is a function of the increase in population. Don't forget, Nigeria is projected to grow at an annual rate of about 3.5 or 4.5% in terms of our population size. And so for the detergent industry or the detergent products, it has continued to grow because the more the population increases, the more people will be in demand of detergent products.
The more people would want to use this product.
Of course.
Exactly. Now let's check out what it looks like on the online sale revenue. So from the online sale revenue, the online sales are predicted to contribute 0.7% of the total revenue in the home and laundry care market by 2024. Regional insights states with high attraction for detergent, while specific data on states with the highest attraction for detergent is not readily available. Urban centers with growing population and increased consumer spending tend to drive demand. Lagos, Abuja, Kano, and Port Harcourt are major cities where detergent consumption is likely to be high due to their urbanization and economic activities. Consumer trends, notably stakeholders in the industry, must recognize that consumers' awareness when purchasing everyday products has increased in recent years. Sustainability is becoming an increasing important topic, and more consumers are opting for cleaning agents that are less harmful to nature and humans. Packaging also plays a crucial role, with attitude towards plastic usage and recycling changing.
Yeah, sorry, I need to quickly interject here. We just talked about the fact that the population, of Nigeria is increasing, making it a bit more interesting for these products, the detergent products, to also continue to make more revenue. So in my thinking, what do you see? You just mentioned some states there that have the potential to attract a higher use of detergent products.
Market, is it through online or through market use?
Whatever market structure that they might want to leverage on. Before I come to the online, what I'm trying to bring out here is the states like Abuja, Kano, Port Harcourt, and Lagos are big cities, based on this your research, that are driving growth in terms of detergent products.
Of course,
do you see, in the course of your findings, do you see whether these states are making any move to set up factories in this regard?
Yeah, I think because there are some other brands who actually have taken it upon themselves to leverage on this product, to leverage on the production of this product.
Yeah.
So I think that they are really doing good. However, in my own position, I would literally suggest that the government do better. However, because there's a higher population and a higher demand
in those states
of these products
in
these states, I feel like it's more like a time where the local governments agencies or areas, or state developers go forth to advise the government to say, sir, I think it is right time that we own the production of this very product. There are a lot of empty areas in
land space.
Land spaces in the states today. So nothing should stop them, or nothing stops them from saying, oh, let's make a full chunk use of this area to make
to set up a factory.
Exactly, to set up a factory, and then own it as a developing state of this very product.
Because the fact is, just like you pointed in your introduction, Unilever, has exited Nigeria, creating an opening, all right? And like you also pointed out, there is an increasing demand for detergent products.
Exactly.
And we are here suffering from unemployment, all right? Nigeria currently have a very high unemployment rate. And of course, we are also talking about the fact that the government is not too liquid because of that, poor revenue streams.
Exactly.
Okay, so having these states, Abuja, Port Harcourt, that's Rivers now, Kano, and Lagos, consider setting up a detergent factory should be a source of revenue for them, not just source of revenue, but also an avenue to close up the unemployment gap.
Also, in general, I think I would say utilizing the strength of production and consumption of every state in Nigeria as a whole is very important.
Very important.
Because, for example, I cannot be a sole producer of, for example, tomatoes in my state, and then you say, okay, you should produce, for example, pepper. So I think every state should literally understand the power, the strength of their cost of production or consumption in their state and leverage on it.
Wonderful.
I think that's what I would largely advise every state or recommend.
Okay, so.
Right, let's talk about the Nigeria's economy as it continues to grow the demand for home and laundry care products, including detergents, as we likely follow suit. While we wait on further data on scandals or stories, it's essential for consumers and businesses to prioritize quality, safety, and sustainability in this dynamic market.
Wonderful. Thank you for this insightful report, Madema. We hope that the government listens to you. We know they are listening, and they will take your recommendation, towards the need for them to consider, their population size and some of these products that are, home-based products that are readily in high demand, to consider setting up factories that can cater for not just the unemployed youths, but that will also contribute to the state's revenue stream. Thank you very much. We'll see your next report on Wednesday. Am I correct?
Thank you, Mr. Osai.
Yeah.
Sure, you were correct.
All right. Thank you so much. Yeah. So thank you very much. That is Madema Ogo, our product analyst, coming live from the States with the product analyst focusing on detergent products and how the state government, particularly those states that have huge population, to consider setting up factories for detergent products, leveraging on the exit of one of the biggest brands that have been into that production before now. We'll go for a quick break at this point, and I will come back with our financial market analyst Stephen Nwachukwu to look deeply into the issue of the stock market and how investors are being protected and how companies, in terms of their corporate governance, can affect their profit, their profitability, and shareholders' interest. I'll be right back after the short break. Thanks to you, the institutions and individuals that are moving the market in your neighborhood. Right now, I have Stephen Nwachukwu on the show to share with us his insights on the issue that surrounds Nigerian Stock Exchange and the market realities, especially having it that some of the companies are selling their shares at an outrageous share value in the market currently. We want to look at what are the issues. Could they be regulatory inefficiencies or just company indebtedness and lack of good corporate governance? We'll try to find out all this from our guests in the house. Steve Nwachukwu, are you there? Can you hear me? Oh, wonderful. Thank you, Steve, for joining us on the show. So let's dive deep into it very quickly. What is your assessment, based on the current international breweries share value that just been announced due to their issuance in the public, I mean in the stock exchange. What, as an investor, or what do you think investors will be feeling at this point in time? What should be their reaction?
Directly. I think in every position, market,
Go ahead.
yeah, investors always factor
Yeah, I
is the
think.
performance.
Can you hear me? We're having some technical glitches there with Steve Machu. Okay, can you hear me? If you can hear me, can you go ahead? Let's be sure your network is clear.
I can hear you. I can
Great.
hear
So
you.
so let's hear you.
Okay. Basically, at every given offer, what investment of such offer. So depending whether it's in the volumes or performance of the company or in the price value of that very stock, investors factor these things. Father, you mentioned a particular company, which is International Breweries, are coming to offer about 161 billion units of want to settle most of their debt position.
Yes.
Well,
Oh,
also is alarming for the first time in
okay. So Steve, maybe you kind of move around a bit your location. Let's see if the network can stabilize a bit, because I think we are struggling to hear you. Good. So what we are trying to look at as we wait for Steve to kind of realign himself to where the network will be a bit better, we're trying to look at the share value of the international breweries, which was just announced yesterday, and to really have an understanding whether it is a fair game or there could be some need for more regulatory strengthening or tightening of the stock exchange to avoid a situation where shareholders, having anticipated an increase in share value so that they can offload and possibly make some profit, will come back and be experiencing a loss. Of course, it is usual in the market, in the stock market, where stock price can go high and go low at any given time due to extraneous market factors that could be beyond the control of the market or of the stock exchange in itself. And so we want to learn from Steve if these are appropriate time for international brewery share to go this low. Steve, are you there?
with you.
Great. So can you just finish with a line of thought before I ask you my next line of question?
Okay, like I was responding, investors always issues around the performance, statistics and data around the financial statements, the corporate governance, the management team of the company, and the history at which they take their business decisions on such offers. Given the fact that International Brewery was able to convince hundreds of millions of dollars, which worth over 500 or close to 600 billion naira, is a good one. It's a foreign direct investment inflow to the nation. Is the performance of that equity, because the primary purpose of buying or investing in equity or shares is to have a return on investment in this company have not been able to pay dividends in the last 7, 8, 9 years, if I'm correct, due to their bad performance, that they have a great market share
Okay.
of the brewery industry. So I think the charge will be on the management team from the
For the
board
stock
and
exchange.
the MD
Okay, so
of the company, sir,
yeah.
to be able to maximize those opportunities and that is available for them to also turn around this positivity or growth.
Awesome. So I want to be clear on something because um, we'll get there. We'll get to that point where we'll discuss manipulations in the market. All right. I believe you and I can agree that there are times that the market can be manipulated. The stock market can be manipulated. But I want to be specific on this to find out from you. Based on all that you have said, based on the fact that their ability to attract these billions of dollars into the country is quite a good a good fortune for us as a country. But in terms of the value of the share that they are issuing currently, do you think it's fair game, or do you think that there is some form of um, regulatory ineffectiveness in this regard for the stock exchange to approve their
Such
issuing?
volume.
Yes.
For the purpose of viewers and for record purpose,
Mm,
in our instant law, there is no such position where the law forbids or limits, but it's a question of the regulatory body making sure that you don't overtly
mm,
take money from the public. Because when you issue shares, you're actually taking money from the public. I think
exactly.
that's the small and medium enterprises to raise funds to support their businesses. So
Mm,
when you create shares or when you offer an existing shares
mm,
to the public through so of the demand or the duties of the regulatory bodies like the
mm.
Securities and Exchange fall foul of any of those very guidelines, perhaps that suggest that you are perhaps changing Nigerians based on such offer. So there are some levels of checks
Mm.
that I know for sure within the exchange commission will also do to perhaps arrive at those numbers, knowing that you are not cheating Nigerians.
Yeah.
Cheating, your company is worth, let's assume, 10 billion naira,
Yeah.
and you floated an offer of 200 billion. You don't worth up to 200 billion, but you raised more than 200 billion. So in that essence, the Securities and Exchange Nigerian, uninformed Nigerians and an investing public. So it is the duty of the Securities and Exchange Commission in this regards to make sure that valuations are
Yes.
properly done to assess value
Okay.
you are coming to the market to offer.
Yes, I just hope that this network will allow us to have this conversation in one breath. So let me ask you. You mentioned about the fact that the stock market is a place that provides small businesses the opportunity to raise fund to put into that business. For the sake of these small businesses that may be unaware or uninformed about this opportunity, can you just share a brief quick insight on how the stock market functions?
Okay, the capital market is there for Nigerians, both multinational, blue chip companies, and small and in the market. Playing in the market is creating that opportunity for you to Nigerian Stock Exchange serves as an exit point. It's called Nigerian Stock Exchange in the sense opportunity for entry and exit so that you can exit the existing shareholders. So ordinarily, the Nigerian stock for the new share, you participate in the Nigerian Stock Exchange for the existing shares you have. So the opportunities are there for small and medium enterprises. Existing platforms created by the Nigerian Stock Exchange for you to float and also for you to participate in the market through other capital market instruments. Papers. These are all capital market instruments.
So we're going to look for a day to bring you back so that we can focus on essentially how the stock market really functions and how small businesses can actually take advantage of some of these market instruments that you are mentioning. But for today, we want to critically look at how, kind of a response to the issue of the international breweries and the value of their shares, that they just released on the stock market and on the stock exchange, and whether it's fair game. But let's look at corporate governance, because like you mentioned, it's a function shareholders look at. These are the things that shareholders look at: the company performance, to be able to make a decision whether to acquire or to purchase your shares. So what is the role of corporate governance in all of this?
Corporate governance is part and parcel or the integral part of the capital market. Have in mind that the capital market is a place of trust where investors we have to trust you to the point of releasing their funds to you. So all measures to actually give that very high rate or high as those compliance or those condition requisites and prerequisites for you to participate or for you layers of corporate governance requirements. There are layers of requirements both in the management team, composition of the management team of the company, both even in place in the shareholder structure of their company. So these are all layers. There are such layers of corporate governance measures that have been put in place to make sure that that trust and confidence, the most important one is the your management team of the board has to be in place. So the representatives also have to be there. Then that will actually audit the firm, both internal auditor and an external auditor. Prudence or financial guidelines are put in quarterly. As we speak, quarter financial statement to the floor of Nigerian Stock Exchange will be able to judge your performance.
Yeah.
Something to be disclosed. Even when you have
still the
market. Insider.
Yeah, insider trading. Just complete your thoughts. I'm saying that the network is quite frustrating. I just hope our viewers should bear with us. We're trying to communicate a very important issue here. We don't want the network to stop us from having you have this important information as it relates to the stock exchange, the capital market, and how corporate governance essentially, because when a company, and like Steve is trying to educate us, the composition of the board of a company is critical in ensuring that the company increases or improves on their performance. And of course, when the company improves on their performance, the bottom line is that the company will become more profitable and more sustainable. And so we want to take a quick insight, a quick look on how does this affect the shareholders? How does this protect the shareholders' interest? And whether the shareholders in Nigeria are not being robbed of their hard-earned money as a function of poor composition of the company of boards that are listed in the Nigerian Stock Exchange. So I don't know if Steve's network is a bit better now. Steve, are you still there? Okay, so I'm just having from our production team that the network is terribly bad. We're going to come back to you after this short break. We'll get a way to get Steve back on air so that we can have this conversation in a complete form. Don't go anywhere. I'll be right back. Thank you for remaining with us on Market Movers on ADBN TV. I want to start by apologizing for the network glitches that we're having in the course of our conversation with Steve Nwachukwu, our financial market analyst. We're working, doing everything possible to bring him back on air because this is a very, very important topic. Looking at the Nigerian Stock Exchange and the market realities as it affects the shareholders as well. Now, Steve was trying to communicate to us the fact that the board composition of a company is very crucial. It is crucial to ensuring that the company improves performance and meets the expectation of investors. I'm getting a word now that Steve is back. Is Steve online?
Yes, I'm with you.
Thank you. Awesome. Thank you very much for coming back on, Steve, for all that you do for us on this channel. So quickly, let's have your thought as it has to do with the corporate governance issue among the companies that are listed in Nigerian Stock Exchange. How does it affect company performance? You were making a case about the composition of that board.
Yes, of course. I think, like I said earlier, the essence of the capital market is to build that confidence. And it's a place that trust is the premium thing. And once trust is the premium thing, both from the operators, regulators, and players, trust is essential. And those key parameters that build that trust are essentially built on. From the operator who is the stockbroker or insider trader or market maker or whatever you may call yourself, even as a company like the quoted companies, to the regulators like the Nigerian Stock Exchange, the Securities and Exchange Commission, and to all the players like the CSCS, the registrar. Trust is essential, and every other rules are built around trust. And that's why it's also essential that compliances to existing rules are followed with. So both from the exchange, the regulators, compliance to those rules are quite essential, and they don't joke about it. There are penalties, there are sanctions that will amend anyone who actually run contrary to those rules. So compliance and trust, or compliance to the rules, are very essential, and the institution does not play with it.
Yeah. So let me quickly come to you now, because because of this issue with network, we didn't have the time to really dwell on this matter. But again, we'll bring you back subsequently. But let me ask you, in terms of the shareholders' interest, all right, because all that is of our concern here is ensuring that shareholders are being protected. Do you think that shareholders are having their fair share of relevance in among the listed companies in the Nigerian Stock Exchange?
Of course, just like I laid emphasis on the compliance and those rules and the rule books of the Nigerian Stock Exchange, all are meant to benefit both shareholders, operators, and key players. All the rules are meant for both the shareholders to ensure and not be cheated, and to benefit from the goodies of the market, and also to protect the interest of the investing public, beyond protecting the interests of the investing public, and also to protect the business that have actually come to the market to operate, and also to protect the institution itself, which is the Nigerian stock market or Nigerian capital market, which is what the Securities and Exchange Commission and Nigerian Stock Exchange and other regulators are meant to do. So both parties are meant, the rule books are there to protect both parties. So at some instances or some cases, yes, there may be some infractions, there may be some suspending, there may be some insider dealing that seems like it sustains the investors or it sustains the shareholders. But the main essence of these rule books are meant to protect investors. That's why the rules are there that you must make available your financial position or financial statement quarterly, so that the investing public and shareholders will have an overall view of you, your healthiness, your performance, and to know if actually they need to pull out from you that you're not doing well or to invest more in you. So these are one of the measures that the rule books are there to protect the shareholders by making sure that these quoted companies makes available their quarterly financial statement to the public.
Yeah, so let me quickly make this point. You know, over time we've come to know that there is a group of investors that are known as activist investors. Now, the essence is that because sometimes, like you talked about the importance of the composition of boards, you know, from the managing directors, chief executive of those companies to, you know, other extant board members of the company, they are the people that have the responsibility to move the company in a particular direction that will ensure that the company, like you pointed out in the issue of the international breweries, not being able to take advantage of their market share, all right, adequately, which has resulted in the low value of their share today. So my point is, do we have a provision that provides for activist investors that sits on the board and you know, have a way of nudging the company into a direction that they think will create more value for the investors?
That would be excellent. That would be fantastic if we have such kind of provisions so that we can have some activists that would be part of the board and part of the decision making. But as we speak, there is no such. But the only opportunity for those activism to happen is during the AGM, annual general meeting. It's still there that you must conduct. It's part of the rule books. It's part of the conditions that companies must conduct their annual general meeting or emergency where they think there is an extra issues that they can't wait to, because it's done annually. That they can't wait to the next 1 year to conduct such annual. So at that point, every shareholder has a voice to state their grievances, just like I witnessed in the last AGM of the International Bureau. We hear the shareholders who will come there and tell the management team and the board and directors that you are not doing well, because the essence of a company is to be investing in a company, is to have returns on investment.
Exactly.
It's not being able to turn your opportunities of your market share to profitability.
Steve, on that note of return on investment, we'll have to return on this topic because we are pressed with time. So I want to thank you for, you know, joining us and for, you know, taking the extra mile to still, you know, have us have this conversation even at this level. So thank you very much. We'll come back to you.
Always my pleasure. Always my pleasure.
Thank you so much.
Thanks for having me.
Thank you. So to you, our viewers, we are grateful for you staying with us on Market Movers. Until we come your way again, please have a good weekend.